Hi there, it's James here, back at the charts. I'm just outside at the coffee shop having breakfast, but it's a good time to update what's going on. Markets have just started moving whilst I was having coffee. And just look at Bitcoin, Ethereum, XRP, Solana, all moving down. And of course, you'll see that the NASDAQ, S&P as well, German 30, all moving down. Not to critical levels yet, still above the invalidation points. But flies here. I was hoping, well, a fruit fly. I was hoping that we would actually hold these levels and move up rather than down today. And I don't like the fact we're seeing weakness in the European session and during the Asian session, although that held quite well. Europe seeing a bit of weakness, and we're seeing Berlin and London selling off a bit too. There's the German 30 selling off. I don't have the FTSE, and of course, if you look at the dollar index, you can see that's ticked up, finished quite strong yesterday actually, as the euro and the pound and the other majors slumped down. As a result of that, we saw pressure on stocks. Just looking across the board here, some of the names holding up quite well, but look at Google, for example. I'm not long on all of these. Coinbase drooping down, all in pre-market, dropping off. And then Bitcoin, as I said, XRP, Solana, Ethereum, all looking a bit weak. Now, I'm not going to be adjusting my position just yet, but if we close below the 50 period here on Bitcoin, I'll consider exiting that or hedging or something like that. And then going across to metals. Now, can gold and silver and copper hold where they are currently trading? And as you can see, gold has dropped down after a little bit of an attempt at the 100-period moving average and that Fibonacci and the ledge there yesterday, falling back today. Remember I said that we may have to retest that level still and move down into that blob. We're a little premature, and that would take us down back to about 78.6% of the move up from the bottom back down to there. It's a good support level. It's a long-term trend line, and it's also the 200-day moving average. So that's gold. I'm hoping that we won't have to do that, but, you know, we've only got a small position, and we've got some hedges on lower down, which we'll look at later. But for now, I hope that it moves up, of course. And silver, we're hedged on. I'm hoping to unhedge silver sometime soon, actually, and take off the shorts and get long again on silver. There are my short positions. There's my long position. I know it's a massive gap and it looks horrific, but we did have another short from much, much higher up over here, and that was offsetting this long. So we've taken profit on the short, but left the long there and re-hedged once we started moving down a little bit too vigorously. We've now broken down completely. We could get lower. I'm looking for that before unhedging and trying to get long again. I'm also long on copper. Copper's doing much better than gold and silver, and platinum for that matter, and not drooping down much like the others have done. I still think that we'll try and hold here, but allow for further dips. There's the 200-period moving average there too. It's interesting that both gold and copper have dropped back down to the major support levels in a long-term trend. There it is there, the purple line. That's where we got long. See, the RSI is not quite oversold yet, but did get kind of there. Whereas on gold, we still also didn't get oversold on gold either. So, you know, maybe the RSIs are going to get reset, and that means a dip down in gold, in copper, and hopefully silver too, so that we can get unhedged. I don't have a trade on platinum. And then going to energies, well, we got a long again on natural gas in the private group last night over there. This is the 4-hour chart on NatGas. So we have two small long positions, a hedge short there. I'm still short from there, but I will take that short off at about $3 if we return to there and let these longs continue. And I have another long slightly higher up too. So I'm hoping that this will move up to 375 and then eventually maybe 425. We're still in shoulder season. There's not a lot of great underpin from the weather. But there might be extra demand created by the bombing of gas fields in the Persian Gulf and the general demand for natural gas as an electricity source, a power source. Lots and lots of it going on, not only through governments, but also private venture in AI and Bitcoin farming, all that sort of thing. Now it's dropped down to 2.9 today, so it's slumping down a bit, but we did try to get through the 20. Let's go back to that chart. We did try and get through the 20-period moving average here on the 4-hour chart. So it's trying, not successfully on the first attempt, with this built-in head and shoulders to the left here and struggling to hold it. There's my curved bottom red arrow, and we're slumped below it now, which is not good. But let's see how we go. If we do break down below $3 again and close below there, I'll hedge my natural gas longs and maybe ride this down to 270 or 280. Now on oil, I'm still short, but there's been a lot of stuff going on in the Persian Gulf today. We got short at the double top swing highs over here and the top of the channel. And we actually tried a third attempt to get through there, making a fractionally higher high, but a fake out. Breaking down, getting to the 100-period moving average on the 4-hour chart, and not really managing to make progress below there, and now holding above the 20 and the 100. On the day chart, it looks like, you know, we're going to be faffing around here for a lot longer. Allow for some probes back into this channel now, maybe up to the channel center line, watch for a reaction there. And that's at about $97, and swinging back to the 4-hour chart, let's just see where that dotted line is. And you can see there it is over there. That's the channel center line, but it's also the underside of this order block, which might provide further resistance. For now, we're still short and still in profit. But, if this starts moving up, anything can happen. As I said in the video yesterday, these are crazy and difficult times, difficult trading times. I've been trading for about 30 years, 32 actually now, as traffic goes past me. And I think this might be one of the most difficult trading periods I've been through. Brent crude still above $100, and that's not helping WTI get down below 90. And then uranium and lithium, also a bit slumpy actually. And you think that they might have just sort of got a bit of a bit under them as alternative avenues for energy, but they have not. And finally, the US 10-year yield still very, very strong. And that's drawing liquidity out of other assets, and particularly risk assets. Not only risk assets, gold and silver also, but Bitcoin and stock names too. So we need to see this coming down, and we need to see the US dollar coming down before we can see any real progress on risk assets. And as we have increasing liquidity, M2 money supply now at new record levels, and the Treasury buybacks going on at a pretty decent rate, there is more liquidity in the system. The dollar should drop eventually, drop down to 90, I think, and then below there to 88, perhaps, something like that. That would be the bottom part of this range. Let's quickly look at this chart. And I'll switch across to the weekly chart because it's quite nice to see it on a weekly chart. There's the Dixie Moab, the big black line, mother of all breaks. We held above it for many, many years, maybe a decade. We've now broken down below it, retested it twice from underneath. Once over there, maybe 3 times. Once, twice, and now 3 times. And I think on the 3rd attempt, we'll either break through or we'll hold down. I'm hoping we'll hold down, of course, because that will propel other assets that we're long on up, and as the dollar moves down. But we need to see both the dollar and treasuries moving down. Have a great trading day, folks. Remember, there's a 14-day free trial available, and all you got to do is click on the link below this video to get that free trial, scot-free, 14 days. And once you've taken the trial and you found it was profitable for you, you can carry on. If not, you can simply cancel and not pay a penny. So I hope to see you in there. Good luck today. And also, please make sure to like and subscribe this channel. It really helps us grow, and it costs you nothing apart from maybe 1 second of your time. Take care.
RSI said just right. Talks about confluence and structure, but he froze again tonight. Knows the Fed, knows the flows, knows where smart money goes. Got a chart that looks like modern art, still can't press the button though. He knows everything, just doesn't trade. Builds a perfect case, then lets it fade. Execution.